I'm Matt Bichard here in Dallas for Nareit's REIT World 2017. Joining me today is Joel Marcus, the Chairman and CEO of Alexandria Real Estate Equities. Joel, thanks so much for joining us.
Pleasure to be here. Good to see you.
Now, your company was honored for its commitment to supporting the health and well-being of both its employees and its tenants. Do you have any examples that you can share of the tangible benefits that these programs have for the company?
Well, we've won quite a number of awards in that category this year, and it's pretty obvious that there are really a couple of things. One is that there's a study that was released that says companies that provide a high degree of sustainability and wellness have a better return on investment. In fact, the number was something like over a 5-year period, 259%. So I think that's very tangible for investors. I think it's also pretty clear, both for ourselves and for our tenants, the ability to attract and retain talent is probably paramount. And once that talent is attracted, to be able to nurture them and retain them for the long term is, I think, very, very important. So we see that as those three things are probably the most important for this company and ones that we see for our tenants who are in these really great sustainable campuses that we've built.
Now, revenues for both the third quarter and the year were up more than 20% from the year earlier period. Are these the results of any specific efforts or initiatives, or are they driven by market conditions or a combination of both?
Well, you always want a positive market environment, but revenues themselves, aside from stock price, really are driven by two things. One is spectacular internal growth. We're at really the top of our sector, the office sector, and that's because we have not only annual steps, we've been able to have very great mark-to-market on leasing, and tenants have come to us over the past couple of years, and this year in particular, wanting to renew at today's rates 2 or 3 years in advance. That's very unheard of. And then the other side is great external growth, delivering a really world-class development pipeline, highly pre-leased, which adds a significant part of our growth.
Now, your company was obviously one of the first to be into this biotech real estate space, but we're starting to see some others more interest in the space. Do you think that more of the biotech real estate is going to be held in the hands of publicly traded companies?
Well, I think historically there have been competitors in absolutely every single market that we're in, so that's nothing new. The nature and degree of that changes over time a little bit, but fundamentally we just give you the best example, a RFP for Merck's world-class pharmaceutical company's West Coast research headquarters. First time they've ever done that. We were competing against at least 3 and maybe 4 other entities, and we won. We didn't necessarily have the best site. We didn't necessarily actually have the best deal financially, but what they relied on was our ability to understand the product. We were going to operate it for the term of the lease, 20 years, and importantly, we were going to deliver on time and on budget, something we've been able to do and very few other people can do if they're not in this business day to day with the expertise and really experience that we have. So competition is one thing, but the ability to deliver the goods makes a huge difference to these companies and your reputation as well.
Joel, thank you so much for joining us.
Great pleasure.
For more information about Nareit's REIT World, be sure to visit Nareit's website, REIT.com.